welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Meghan Grebner. As you can tell, I am on the road this week. Today, I'm in the nation's capital, and not necessarily on business, but to show my family around a city that I love so much. With us to talk about what's going on this week in livestock markets is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right. So we talked last week, and we talked about the market wanting to find direction, and it found it. It went down. And I had hoped maybe when we talked this week, we would have better news to talk about, but it doesn't look like we do this week either.
That's right. When you look at kind of where current markets are this week, again, if we look at cattle to begin with, it's been another tough week in cattle markets. When you look at fed cattle prices, it looks like we may end up the week here at the $1.10, which I like to remind us is the lowest level since about 2012. So we've come down considerably from those record highs. Some of the largest percentage declines we've likely ever seen in fed cattle prices in such a short period of time. That's made feeder steers also be down. We're 2 to 8 lower for the week in terms of feeder steers. Feeder heifers as well are lower. So across the board in cattle markets, it's not been a very good week for us. I think it's important to remember that anytime you put an additional 4% more beef supplies out on the marketplace, it gives others in the channel besides producers a chance to take additional price away from producers. On the hog side, we've been pretty flat on hog prices, maybe down $1 or so for the week. But you have to remember on the hog price side, we're at some of the lowest hog prices we've seen for a while as well. So it's not very good news across the board. And even when you move into the meat side, it's been a tough week by and large on meat prices. And we'll have to see where we go from here. But we are continuing down the direction that maybe we didn't want to have to talk about, Megan.
Scott, as we look at some of these numbers and we look at this current and continued decline in hog and beef prices as well, how much pressure are we putting on the nation's livestock producers, and what are some of the things that we maybe didn't want to have to talk about that we need to have actual conversations and put it into real terms when it comes to making money this year?
Yeah, absolutely. Well, so I like to remind us that, when you look back a couple of years ago, the prices that we had were record high prices. And so, yeah, we've come down in percentage terms in large amounts over the past year and a half or so. But in terms of the bottom lines, even for pork producers today, the good news of this story of prices is that input prices have been much lower. So although we talk about much lower hog prices and much lower hog profitability, we've actually stayed in the black for the most part in 2016 because feed costs have come down. So it's nice to be able to have that other side of the equation also lower cost for us. Now, I will say on the cattle side, no one thought we would see the kinds of price declines that we've seen over the last 12 to 18 months before we started all of this. But I always say that old extension adage, the cure for high prices is high prices, is continuing to hold true. Now, for producers, I always go that the best thing they can do is evaluate where they sit on the cost side of the equation. What costs can they actually potentially lower without hurting output? That's not an easy question to answer, but one that they really need to examine as we continue to see cattle and hog prices fall.
Scott, as we talk about those prices in general, USDA came out with their farm income projections for 2016, and a little bit of a surprise in there, or maybe not something. Maybe it was a little bit of a surprise for us to see those numbers that they came out with this week.
Yeah, I think when you look at farm income that came out this week for 2016, USDA is now saying it's going to be $71.5 billion. That is a large decline, almost $50 billion from the peak that we saw in 2013 of $124 billion net farm income level. So it is a major adjustment, just as we've seen hog and cattle prices adjust lower. USDA did give us an early estimate in 2016 that would have suggested farm income even lower, but some lower production expenses have been helpful to giving us some ability to maybe raise that 2016 estimate a little bit. I am still concerned about just some of the financial pressure that we're beginning to see in agriculture, and if we continue down the road of lower prices for all of our commodities, that it's going to get tough on producers as we look ahead the next couple of years. So not great news, when you look across the board, but again, I like to remind us we're coming off of record highs in all of these areas, and we all know that we can't keep at those record highs forever.
Scott, one of the things we also talk about as we talk about is the demand and the other side of it. Restaurant numbers this week, any surprises in those?
Yeah, so we're still seeing the Restaurant Performance Index being positive, and that suggests we're getting some growth overall. But however, that growth's really been slowing since 2014. At a time when we need more demand strength, not less, we're seeing that demand growth really slow down considerably. So I worry what we're getting, and when you look at the Consumer Traffic Index numbers we get along with that, those have been under 100 for many of the last several months, again, suggesting some issues. And so why do I always focus on that Restaurant Performance Index? When you think about where all of our meat protein goes, and I'm thinking chicken, beef, pork, seafood, and other meats as well, we produce a little shy of 100 billion pounds of those products. Roughly around 25% of that goes to food service. So a large portion of what we produce ends up in that food service side, and that's why the Restaurant Performance Index is very important. And as we continue to increase supplies, which to me looks like will continue well into 2017, we need more demand strength, not less, if we're going to try to curb some of this decline in prices that we've seen.
Scott, we had talked about hoping to have some positive news this week. As we do that, let's talk a little bit about maybe some hope for some positive news as we get into and we get ready to talk next Friday.
Yeah, so we do get our monthly trade data out next week. So I hope that might give us some positive news, because it's not just domestic consumers that matter. It's going to be what happens in the rest of the world as well. And right now, just given where we're set up as we go into the fall here, we need somebody to give us some more demand, and hopefully we might get some positive news out of what we see in that monthly trade data that we'll get out next week here. I think as exchange rates, at least the dollar strengthening has stabilized, hopefully we're going to find some positive news in what we get in that trade data.
Anything else this week, Scott?
I think we've covered the major topics. I hope we can have something a little more positive to share with folks next week, Megan.
That makes two of us. If you want to subscribe to our weekly livestock market update, visit our website, brownfieldagnews.com, and click the subscription link there. I'm Meghan Grebner for Brownfield.